Good morning, learners. Let us wait for 2 minutes. Few more participants to join. Good morning, everyone. Hope it is visible for you. Shall I start the class? Today, let us discuss about the block 4, which covers income from house property. I have covered first block. Yesterday, I think Sir might have covered residential status, which I stopped after completion of little bit portion. Third block, I will explain in the later classes. So I would like to explain income from house property in this class. As I explained, according to Income Tax Act, there are only 5 sources of incomes have been categorized. Those are income from salary, income from house property, profit and gains of business or profession, capital gains, and other sources. So I'd like to explain this second head of income, that is income from house property. Which type of income is considered as income from house property? Means how to distinguish a particular income into a particular head. Here, when an owner let out a particular house on rental basis, whatever the amount he is receiving as a rent from the tenant, that is considered as income from house property. Here there is a distinction between selling of a house and letting of a house. When an individual sells a particular house, whatever the amount he received, that is called as income, which comes under capital gains. But whereas rent arised out of letting a particular house, the type of income is called as income from house property. So this is the distinction between capital profit and income from house property. The same situation where we are getting somewhat amount from a particular house itself. But when we observe the situation of selling a house, the amount is considered as income from capital gains. but letting a house is income from house property. So in this chapter, let us discuss what are the characteristics of income from house property, means which type of incomes comes under income from house property. And in order to compute the taxable amount of income from house property, what are the aspects required? So that is called as determination of annual value. So when you determine the annual value, if you adjust somewhat deductions to that annual value, then only it is considered as taxable income from house property. In order to determine the annual value, we need to distinguish between let out property and self-occupied property. Just a moment, sorry for the interruption. So income from house property is the second head of income and is important because most of the assessees might be having their own houses and they will be giving that house on rental basis if he is having more than one house. The point is that our house property has not at all defined in the Income Tax Act, but through various, after observing various aspects, we will come to know about the what is actually income from house property. And moreover, regarding the income from house property, the relevant sections which are in Income Tax Act are Section 22, 23, 24, 25, 25A, 25B, 26 and 27, which deals with income from house property. And one more thing is, in order to compute the annual value, what are the steps required? Those are mentioned in Section 23. Not only determining the annual value, under each and every head, every assessee will be getting somewhat deductions under each head as per terms and conditions, which are mentioned in Section 24. So all the provisions from 22 to 27 are relevant with the income from house property. Here, as I told, there are certain characteristics in order to consider a particular income as income from house property. What are those? Let us see. in order to consider a particular income as income from house property, there must be a building and income should be arrived as a rent from that building. Sometimes some land is also attaching to that building, which may be given on let out purpose. When it is attached to the building, that land is attached to the building, then only it is all the income arised out of that particular building along with the open space. That type of income is also called as income from house property itself. So here, not only the term building means whatever we see in our daily life. Not only that, it includes docks, warehouses, or any other work where block of bricks, stonework, etc. are involved. So, such type of construction is also called as building under the head income from house property. So, that is about characteristics of income from house property. Means any type of shelter which is having 4 walls in a livable situation, docks, warehouses, whatever it may be. All those are comes under buildings under income from house property. Here, whatever I'm saying about the rent yielded by letting out of a house is not considered completely as income under income from house property. Certain process is there. That is calculation of annual value. We can say that it is not the rent that is put into tax, but also the annual value. How can we calculate it? Which carries special meaning, which important from viewing taxing income, and certain steps are required, which will be coming to know later. So, not only the knowing the aspect of rent is important. Calculation of annual value, which is interrelated with rental value. So knowing of that annual value is important. So what are the steps for computing the annual value? Let us see. After discussing 2 more aspects. All the participants, please mute yourself. Please mute yourself. Next aspect is ownership. This is very important because unless and until the assessee is not a owner of a particular building, then whatever the rent he is receiving from that building is not considered as income from house property. How it is going to happen like that? Means sometimes subletting aspect is also arises in our daily life. So whatever the income arised out of the building itself as a rent, but here he is not the owner when he is giving on sub-rental basis. So that comes under another income which covers income from other sources. So the assessee should be the owner of that particular building. Otherwise, that income is not considered as income from house property, even it is arising as a rent from a building. So calculation of annual value. Next, ownership. Observing of ownership is important. Next question is sometimes, means next aspect, that is sometimes a house may be used for assessee's business as well. When a house is used for assessee's business, which is owned by him, in that situation, there is no question of taking a notional income from that particular building, which is means the owner itself, the business owner itself, the owner of that particular house. In that situation, what happens actually is whatever the rent in that particular area, he will be collecting, means the similar type of house, whatever the rent the other people are getting will be considered as an expenditure which is deducted from the profit or loss, profit and gains from the head, business or profession. So these 3 points are important. First, annual value, I will be explaining after a few minutes, which requires certain steps. So in order to understand a particular income which comes under whether income from house property or not, we should observe ownership and as well as is it being used for assessee's own business. So these are the important points. Next, there are few exemptions on which cannot be treated as income from house property. Those are incomes arising out of house property which are not at all taxable. They remain outside the purview of Income Tax Act. Just like in the first class, I explained about income from agriculture or agricultural income. So why I am emphasizing this? Because while explaining a building, I use the land which is attached to the building. So sometimes income arising out of land is also, few people may be confused with the income from house property itself. So whether if it is using for agricultural purpose, it is not considered as income from house property. Next one is if any property held for charitable purposes, that is also maybe on rental basis, which is also not comes under the purview of income from house property. And please, all of you participants, mute yourself. Property used for own business or self-occupied house, which could not be used, means which is in an idle position, means income from residential property in the occupation of the owner, means if he is not getting any benefit from his employment, business or profession being carried at any other place, then it is also not comes under the Income Tax Act, which comes comes under the head of income from house property. Next one is the utmost important topic, that is determination of annual value. So just now I use the word as annual value. Means in order to consider a rent as an income from house property, we should first forego with annual value. In order to compute the annual value, it is inevitable to know about a few words. Those are actual rental value, municipal rental value, fair rental value. Please mute yourself, all of you. Fair rental value, standard rent, and expected rental value. Let us see one by one. What is actual rental value? The name itself expresses us. Means it is the amount of rent actually received by the owner of that particular house property, which is arising from a tenant. So that amount is called as actual rent. And here, Sometimes a owner may provide few facilities which he is going to charge somewhat amount based upon the facilities. So whatever the excess amount by providing few services, sometimes, for example, 1500 or 2000 will be service charges he is collecting from the tenant. But in actual situation, he may not spend that much of amount. Say, for example, 800 or 500 he is spending that much only. Means whatever the excess amount he is charging from the tenant, that is also not covered under the income from house property. So other sources of income. That here they mentioned as income from other sources. Sometimes maintenance charges, whatever the owner collecting from the tenant, may be included in the rental value. Say, for example, 20,000 is charging as a rent from the tenant, but he is providing 2,000 worth of services. It is being included in the rental value itself. So while calculating the actual rental value, we are not going to take it as 20,000 into multiplied by means 12 months. Means always we will be computing the income from house property for a whole year. If at all the house is being idle, we are going to deduct that amount. That is another issue. But always we will be converting the monthly rent into annual value. So at that time, we need to deduct whatever the 2,000 he is providing services and charging on behalf of that. So 2,000 into for 12 months, the 24,000 will be deducted in order to compute this actual rental value. Next, municipal rental value. What it is actually? We all know in order to collect the municipal taxes on house property, local authorities always imposes municipal taxes based upon the rental values on a particular locality. So whatever that value they determined, means determined by the municipal authorities, is known as municipal rental value. So is it familiar with the actual rental value and municipal rental value? No. So let us see the fair rental value. What it is actually? Fair rent of a property can be determined on the basis of a rent that is similar property in the same, or we can say that similar locality fetches. Means we can assume that an house which is adjacent to our house, how much they are getting, which is exactly the area wise, means we can say that facilities wise, furnishing wise, if all the elements are same in the same locality, how much they are getting, the other tenant is getting. So that is called as the fair rental value. So on the basis of rent, that is similar property in the similar locality fetches. This is utmost important in order to calculate the expected rent of the property. As I told, there are few steps required in order to compute the annual value. Next one is standard rent. What it is actually the term? If any property which comes under the purview of Rent Control Act, usually metropolitan cities Delhi, Bombay, Chennai, that Calcutta, which comes under the purview of Rent Control Act. So whatever the rent fixed by that Rent Control Act will be considered as standard rent. So the expected rent of house property cannot exceed the standard rent fixed under the Rent Control Act. So, as I told, expected rent can be computed by knowing the fair rental value. But he's saying, whatever the property which comes under the Rent Control Act, whatever the mentioned standard rent should not exceed the fair rental value. Next one is expected rental value. So all the terms are important. Unless and until if you are not familiar with these words, we cannot calculate the gross annual value, which is the starting step to compute the income from house property. When we all come to know about the four mentioned words, it is easy to compute expected rental value. So it is the sum for which the property might be reasonably expected to be let out from year to year. So in order to compute that expected rental value, we need two terms. That is municipal rental value, another one is fair rental value. So here we already fair rental value discussed, municipal rental value discussed. So now what is the procedure to compute the expected rental value? Here in bold letters they have mentioned. The higher of the municipal rental value and fair rental value, means in the question itself they will be providing the data. So we need to just compare the municipal rental value and fair rental value. So whatever is the highest amount among municipal rental and fair rental value, that should be compared with the standard rent. Okay, so standard rent topic arises only at the time of a building if it is under the control of Rent Control Act. Means we have to identify the location of the house. If it is not included in those four metropolitan cities, then no need of comparing the standard rent or about thinking the aspect of standard rent. So if standard rent matter arises, then only we should compare this fair expected rental value with the standard rent. So in the first step, we are going to arrive one amount that should be compared with the standard rent, and lesser of the two is taken as FRV. So here one small example is there. Here a property is covered under the Rent Control Act. He is mentioning as fair rental value is 40,000, municipal rental value is 46,000. So in order to compute the ERV, we should compare FRV and MRV. So 40,000 and 46,000. So higher of the municipal rental value and fair rental value. So obviously 46,000 will be the higher value. So after arriving at ERV, so here this is mentioned A, B conditions. We are going to get higher amount as 46,000. Then that 46,000 will be compared with standard rent, which is 35,000. What I mentioned, lesser of the two is taken as ERV. So lesser amount means out of 46,000 and 35,000, lesser value is 35,000. So ERV is taken as 35,000. So in order to determine, first please go through all these terms, then observe this definition. The next topic is letting out of a house property. So the gross annual value, whatever I am explaining since the beginning of the class, is selected in the following manner. Means in order to compute the gross annual value, it is essential to find out ERV, which we completed in the above step. So let us see about gross annual value. If possible, please mention all the terms. So first step in computation of house property starts with gross annual value. The expected rental value is determined like in the above step. What it is? MRV and FRV. And it should be compared with the standard rent. Lesser amount will be taken. In some situations, whole property, means we can say that whole building or a part of that building is let out throughout the year. Sometimes vacancy period may exist. So there is a distinction between computation of gross annual value under the situation of letting out throughout the year and under the situation of if there is a vacancy period. So let us see first if it is for throughout the year. Here there is a small example. From this, he is asking us to compute the gross annual value. I will explain one first and second situations. Has mentioned FRV, MRV, actual rent and standard rent. So under the situation 1, he not at all mentioned standard rent amount. Means we can say that that particular locality is not comes under the Rent Control Act purview. So determination of gross value under the situations. So in order to compute the expected rental value, what I told, MRV and FRV need to be compared. So higher is 85,000. Next, 85,000 need to be compared with the standard rent. Here, standard rent is not mentioned. So whatever the 85,000 is there, that we can consider it as expected rental value. Now, whatever the expected rental value is there, that need to be compared with the actual rent. Okay. So higher of the expected rental value and actual rent value. So here, higher is expected rental value, that is 85,000, that will be considered as gross annual rent. Gross annual rent. So that's why I mentioned in the beginning of the class itself. That is, here gross annual value is not completely bothered with the actual rent he received. Means under the Income Tax Act, there are certain provisions in order to compute the income from house property. Means whatever we are getting on rental basis, that amount the government is not accepting that as income from house property, because we all know everyone tries to find out the loopholes and take the advantage of income tax liability. So that's why few provisions are mentioned like that. So here actual rent is lesser than expected rental value. Even then also, we are considering that gross annual rent as expected rental value. Means we are comparing. Let us assume expected rental value is 75,000 and actual rent is 85,000. Just reverse it. In that situation also, gross annual rent will be 85,000 because higher of the following, higher of which expected rental value and actual rental value. Means at any cost, we are not going to, even if we try also, in order to escape the tax liability, it is not possible as. So whatever the higher amount is there, they are considering that as gross annual rent. So this is the first step in the computation of income from house property, that is gross annual value. And what I told, there are few situations which is let out throughout the year. Sometimes vacancy period means any tenant has not yet occupied the house. For example, say for example, 2 months or 3 months. Then the situation is different. Calculation of gross annual value is different. And one more situation also exists. Sometimes the owner, even after trying to collect the rental amount, sorry, please. All of you, please mute yourself. Even after taking a reasonable attempts to collect the rent, he may not be getting the full rent. So, unrealized rent, that concept is called as unrealized rent. So, here it is. House property is let out and there is unrealized rent. So, we can say that the last two situations, whatever the vacancy period is there, unrealized rent is there. Sometimes they may be providing the data, or sometimes we can say that the house has been let out for throughout the year. So means we can identify by reading the question itself. So we have to observe. Sometimes he may give the actual rental value for the whole year. And he may say that per month rent is like that. With that, we can assume any unrealized rent is there or vacancy period is there. We have to convert that monthly rental into annual rent and we need to compare. So let us observe under these situations how we can calculate the gross annual value. So please remember, we are still in the step of the starting step, that is finding of gross annual value. I will show the pro forma, then you will be getting the idea regarding why I am saying as the first step itself. Here it is. Computation of income from house property. Please have a glance at it. To summarize the income from house property, calculation should be as under. So annual value. So we are in that situation under that first step itself. So municipal rental value, fair rental value, and actual rental value. Highest of the three values. Sorry, actually not three values. First, we need to calculate that ERV, then that need to be compared with actual rent. After finishing that step, we need to deduct municipal taxes. Say, for example, we are getting 5 lakhs as income from house property, but we are paying income tax, municipal taxes on that house. So that municipal taxes amount will be allowed as deduction under Income Tax Act. Means we are paying somewhat in the form of municipal taxes. Means our net income is a little bit lower than whatever we received. So that's why this is a admissible deduction. Municipal taxes. Then you will be getting the net annual value. So it is not at all finished. Few more exemptions are available under Income Tax Act under the head house property, income from house property, which are relevant, I will explain. So from that value, we need to deduct two exemptions. Those are comes under section 54, which is A and which is B. What is A deduction? That is actually 30% of net annual value. From where we are getting? In the above step itself, net annual value is there. So from the gross annual value, if you deduct the municipal taxes, you will be getting net annual value. From that, flat 30%. Say for example, 5 lakhs amount is there after deducting the municipal taxes. then you will be getting the deduction as, means under section 24, that 30%. So we can say that 1,50,000. The purpose is that when we are owning a house, usually we need to incur in the form of repairs or else whitewash or else maintenance, few things, means on few aspects we have to mention some amount. So if the government allows, means if they permits upon our wish, we may try to give as much as amount as these repairs and maintenance. That's why they're not allowing as per our wish. So they are giving this 30% of net annual value for the purpose of maintenance. Here they are not mentioning like that, but it is for that purpose only. So that is 30% of net value. Means in the question, if they mentioned as repairs, maintenance, insurance, few items mentioned and the figure also. Even then also we need to ignore all the items, because for the whole aspect, the 30% deduction will be given. So again, we are not going to consider. So we are deducting that amount, isn't it? So under section 24A deals with that 30%. Next one is interest on sums borrowed in respect of house property. You all know very well. At the time of construction assessee might be getting loan from a bank and he is going to pay EMIs, which includes part of loan amount and part of interest also. So whatever the loan interest on sums borrowed in respect of house properties also will be allowed as deduction, but to some up to some restrictions itself, not the whole amount. Okay, that restrictions I will explain. So this is the pro forma. Next one is, this is under the situation of let out property. Sometimes they will be asking to compute the gross annual value or else income from house property. Even if an assessee is having two houses, one is for let out purpose and one is for his own purpose, that is called as self-occupied. So for the self-occupation, only one house will be permitted. Means we can occupy many number of houses, but as a deduction, means they are not going to consider the gross annual value which is occupied by the assessee for only one house. So here, if you observe, property occupied by the owner, annual value of a single house property, so clearly mentioned in the occupation of the owner, will be taken as nil. So if they mentioned about self-occupied house, so that gross annual value will be nil. But whatever the deductions which I mentioned under section 24A and B are allowed, means we are going to get the negative figure. So what is the use of that negative figure? Means when you sum up the whole income, means when you try to compute the income from, means the total income from an assessee. So from positive figure, you can deduct this negative figure. So total taxable amount will be reduced. So this you will be fetching over computation of total income and computation of ultimate tax liability. So this is for a single house. Means if he is having two or more houses, even then also if he is occupying, the tax provisions are applicable for only a single house in order to compute the gross annual value as nil. So this is what. So if you club both, means sometimes assessee might be having two houses, one is for self-occupied and another one is for rental purpose. So you need to club like this. For any number of houses, you need to maintain that pro forma itself. So like this. Before starting the explanation regarding the problems, whatever I left over here, regarding the unrealized rent and vacancy period. So, if the rent actually received or receivable is more than the ERV in spite of vacancy, the actual rent is taken as gross annual value. Means while computing the gross annual value, ERV is the first step. Even after vacancy period also, whatever the amount getting by an assessee is more than the ERV, then the actual rent is taken as gross rental value. Otherwise, vice versa. You can observe here. Here MRV is 5,000, FRV is 56,000, standard rent is also given, actual rent is also given. What he is saying, house was vacant for 2 months during the previous year. How can we compute that gross annual value? First, we need to calculate, means we need to compare MRV and FRV. Higher of the amount is 56,000. So that 56,000 need to be compared with 48,000, that is standard rent. So whatever I told, ERV should not exceed that standard rent. So standard rent will be considered as ERV, 48,000. It need to be compared with the actual rent. Higher of the following will be annual value. So higher among the 48,000 and 45,000 will be 48,000. So here it is, the adjustment. What he is saying, vacant for 2 months. How can we compute the vacancy period rental value? Here, actual rent is 45,000. So if you divide that 45,000 with 12 months, we can say that you will be getting 3,750 per month rent. So here 2 months is vacant period. So 3,750 multiplied by 2, that comes to 7,500. So you need to deduct that amount from 40,000, from 48,000. So this will be the gross annual value when vacancy period is there. I will explain furtherly about the unrealized rent later. First, let us see about a complete problem regarding the computation of income from house property. Before that, it is essential to know about the section 24, A and B. Here it is 9.6, which mentions about deductions from annual value. First, let us see for self-occupied house property. So according to section 24, allowable net annual value. First, we should distinguish whether it is a self-occupied house or let-out house. If it is for self-occupied house property, no deductions will be allowed in respect of self-occupied property where the annual value has been taken as nil. But if some interest has been paid on borrowed capital in order to construct the house or in order to acquire the house, for the purpose of interest up to 30,000, we can say that that loan amount 2 lakhs, if loan is taken on or after the period is 1st April 99, and also the house must be completed within 3 years from the end of the financial year where he borrowed the capital from the bank. So what are the prerequisites? Interest is admissible up to 30,000 itself, and also the actual loan amount is up to 2 lakhs only, and which should be borrowed before 1/4/1999, and that completion of the house must be 3 years from the end of the financial year. Then what is the situation of getting or sanctioning of loan after 99? Here it is. If the capital is borrowed for any other purpose, you can say that, sorry, I mentioned as before, it is after 1999. So any other amount, for example, we can say that for repair purpose, for additional amount which is required for the reconstruction or whatever it may be, which is after 1/4/99, then the maximum amount of deduction is up to 30,000 only. So whatever I mentioned, under the circumstances, self-occupied house will yield a loss, which will be set off against other income. As I told, it will be adjusted with the total income. Setting of losses will be explained in the later part of your sessions. So this is about self-occupied house property, computation of income from house property. If it is for let out property, only 2 deductions are allowed from the net annual value of let out house property. Those are standard deduction and interest on borrowed capital. So that is 30% of net annual value. Next one is interest on borrowed capital. So it is allowable as deduction on accrual basis. Means whether we already paid or yet to be paid later. Even then also, it will be allowed as deduction. But whereas under the situation of municipal taxes, when we pay actually to the municipal authorities, then only you will be getting the deduction. So this is the difference between standard deduction and interest on borrowed capital. Here on accrual basis, there it is cash basis. Next, one more important topic which is mentioned in the bold letters here. Interest for the period of prior to the completion of the house is called as pre-construction interest. This I will explain when we solve the relevant problems. Next, let us see. Here, Mr. Ghosh owns a house. It has been let out for the residential purpose to so and so person, a company director, on a monthly rent of 30,000. Other particulars he is furnishing as follows. What we need? Municipal rent is required. And a few other aspects also he is mentioning. Let us see how to compute gross annual value, net annual value, and income from house property. So in order to compare this gross annual value, you know very well about the steps, whatever just I mentioned. When you compare this municipal rental value, fair rental value, and afterwards, if any standard rent is there, then you need to compare with the actual rental value. Under that stage, higher of the amount. So here, that is 1,56,000. Here he is mentioning as he could not recover an amount of 15,000 from the tenant in spite of his best efforts to require. Here, this condition is mandatory. Means in order to decide whether an amount is unrealized rent or not, the owner should take proper measures to collect the rent. Here what he is mentioning clearly, he put adequate efforts. So in that situation, you can deduct that unrealized rent from the actual rent. So you will be getting that 1,41,000. Here clearly mentioned as municipal taxes 7,200. As I told, ground rent, insurance will not come under the computation of income from house property. We are not bothered with insurance because flat 30% deduction is admissible under section 24. So that's why we can straight away deduct the municipal taxes, whatever he paid, 7,200. So if you deduct that 7,200, the figure you will be getting is considered as net annual value. As we know, 30% of deduction will be admissible under section 24. If you calculate 30% on 1,33,800, you will be getting 40,140. Next one is interest on borrowings used for construction. So here, interest on money borrowed for construction of the house. We know very well that below 30,000 is admissible as deduction. So that 18,000 will be deducted. Here, one peculiar situation is there. At the last, the AO accepts the claim to treat the amount as unrealized rent, but later he received the amount of 26,000 as arrears of rent. So that arrears received after the calculation. So that's why we need to add that arrears also. Means 26,000 he collected. And obviously the 30% deduction is available under that situation also. So that is why 26,000, 30% of 26,000 is also deducted. Ultimately, he's getting 93,860 as income from house property. So this is about computation of taxable income, which comes under the head of income from house property. And foremost thing, which I ignored, that is you have to write the title. What you have to write? Computation of taxable income of Mr. Ghosh under the head income from house property. For the assessment year, here, please note that one. Assessment year is 21 to 22. So this is a past edition. This is not a recent one. So what you have to mention, assessment year is 21 to 22. So every year will be changing according to the financial year. So this is what regarding the important aspect of computation of income from house property. If any doubts are there, please you can express. Otherwise, I would like to end the session. You can unmute yourself. Please, Aruna, tell me. I would like to end the session. Let us meet in the next week's class.